G'day there. Welcome to the closing bell on the 8th of Feb. And if you tuned in last week, you'll know that I was saying, look, the gold oil ratio looked like it could really get moving. Gold looking like it was going to really ramp up, and oil prices looking a little dangerous. Fast forward a week, and gold's taken off like a rocket. And oil is chipping in as well, getting hammered. And I'll just update you on that oil chart to give you a feel for why I'm saying if we do see another leg lower, it could actually set off quite a chain reaction. And that's all feeding into gold prices in stocks. The gold stocks really looking pretty good. Some of those smaller caps being well supported. The idea, of course, that gold price keeps running, their margins just flying higher, and a lot of them are quite unhedged. And oil prices getting hammered, really taking the heat out of a lot of that costs that have been ramped up. Of course, their energy costs are pretty huge, needing a lot of oil to run operations and inflation coming off too. So really a bit of a sweet spot. It is one of those things we know we've had a big long run in gold already. I've been telling you about that for a long time. I've been giving you ideas on that front a long time ago. So hopefully you're sitting on plenty of profits in those. But we are in a phase where it could surprise to the upside at the moment. And maybe that's just going to be a few months and then the heat comes out. We don't know. But it is just one of those points where it feels like everything is going gold's way. And another thing I'm going to point out today is the fact that I'm getting a bit wary of that US dollar. Looks like the US dollar, I think, could be starting to come off. I will point that out for you. And also looking at that in relation to the US yen, because we remember the tech stocks getting hammered when the US yen fell over a while ago. That unwind of carry trades, people making leverage bets, borrowing in yen, investing in the US, and buying tech stocks with them, with the money. And we've got Japan has raised rates, I think last week. Their 10-year bonds up at 1.28%, which seems like not much, but when they were negative or zero a little while ago, and the amount of debt that Japan has, pretty soon that's going to hurt. So that's all playing out as well in the back of our mind, and also US bonds looking like a bit of a buy as well. So could be a situation of US dollar turning back down after a lot of strength, and those bonds could be a buy soon because does that feed into the property market maybe starting to look interesting and other high dividend plays. So that's all very important to be aware of, I think. So let's jump to the charts and see what's going on. So let's kick off with the oil price. I'm only going to be very quick on this. This is a weekly chart of UK oil, so Brent crude oil. And I've changed the color on my 10-week exponential, this line here, just to make it clearer for you. Because the down bars on the candles are red, I had it red for that, and it was a bit unclear. So I've just changed the color of that for now. That just lets you know very quickly what the weekly trends are. And last week I was saying, look, watch out here. Oil prices, if they do break below the low of the last few years, watch out. And this is the low there. That's going back to 2023. So you can see prices have been above that level all that time. And my fear is below that level, there could be a lot of stoppies and oil could actually surprise to the downside. And I think last week's trading really confirming that the selling pressure is there. So I just want to give you a sense of, how I look at things. I always tell you about, these ranges, and I think it's good to just point out for you so you can see it for yourself, how it all works. So there's the range from the last couple of years in oil. That was a big rally that happened from March 2023 to September. So then if we analyze all of the data since then, based on that range, there's your point of control, the midpoint. which is the fulcrum, which prices oscillate around. And then we've got the buy and sell zones, don't we? So that's that area there and that area here. And just look at how prices have moved since. You can see the sell-off down into that buy zone, back to the point of control, up into the sell zone, back to the point of control, down to the buy zone, exactly, back to the point of control. Rally, ooh, showing a bit of weakness, didn't quite make it there, failed, fell to the buy zone again, back to the point of control. This time, quite a serious sell-off, actually went to retest the low. So a few stoppies going off there. And since then, what we've seen is what I'd class as a ABC rally back to the point of control. So you got that rally there, a sell-off, and then back to the point of control. You can see that was just a few weeks ago. And this is why I find it interesting what's happening now, because it's retested that point of control. The selling pressure is there. Then we can see weekly sell pivot came in there, sold off, and that's when I said, whoa, watch out here. This is a little bit dangerous now. And then we've had another bad week this week. And now you're asking yourself, well, is this going to go and sniff down here? And we know there's a hell of a lot of stoppies under there, under 70 bucks. So it's all sort of setting itself up. It hasn't happened yet, but this is where I'm saying that gold oil ratio can really rocket if we do see oil prices getting hammered. And gold, really taking off. They're saying it's, hard to get gold. Central banks are after it. We know the US dollar's been strong and gold's been strong. What happens when the US dollar's weak? And gold is usually strong when the US dollar's weak. So do we see a really big run? Who knows? But you can see there in the last week a really big run in that gold price. It's just trending pretty strongly now. You've just got to wait until you get a weekly downtrend before getting too worried. Who knows how high it'll go? So that's the situation from last week. Really is sort of unfolding as expected, but there could be a lot more to come. So looking at the US dollar, I just wanted to note for you, looking at again at this weekly chart, and this goes back. This is just looking at that rally that happened again a few years ago and analysing that. We've got the rally from 2021 up to 2020, late 22. So there's your range that we've seen in the US dollar. There's your point of control. You can see lots of work done, really holding above that level. So it's been quite strong. And with Trump coming in, we've seen before he got in and since we've had a really big run in the US dollar. But that's going right up into that sell zone. So this is why I'm just wary of the US dollar here. And I've said to you recently that if we do see the weekly trend turn down, so you can see in the past weekly trend turning down, then we may get some follow through selling. So we're not there yet, are we? So really, we need this to cross 10-week exponential crossing under the 20 simple, where I'll really be concerned that you're going to see a sell-off, because what I'm thinking is, this rejection from the sell zone and a mean reversion event, and look, could swing all the way down there. Who knows? But we did get a weekly sell pivot just a few weeks ago, and this is why I'm interested. And we've seen some pretty strong selling pressure come in since. So if I'm just looking at this up close, there was your high, there's your weekly sell pivot there. And then we've got a lot of work done going up into the selling pressure and getting rejected. So there is selling pressure there, quite strong selling pressure. And, I'm wondering back under this sort of 107 region, what will be there? Will it actually accelerate to the downside? So it is sort of setting itself up where I'd be of the view now of getting a little bit nervous that the US dollar is actually going to sell off a bit here. And I need to see it, back above 110 to counteract that view. and it's currently at 107. So I'm sort of leaning to this US dollar turning down, and you can see we've got the MACD down here, just on the edge of turning down that moving average convergence divergence, which can give you a really early sign signal, but also, it can give you too early a signal. There you can see it ended up turning back up. Um, so it is just, I think, a little something you've got to consider now. And that really feeds into a lot of things, of course. US dollar coming off, commodities picking up. You see copper's starting to pick up a bit, and it'll certainly really start to go. I think some of those commodities, if US dollar really turns down, but also consider this US yen. Now remember, wasn't long ago that we were looking at this and considering this huge move that we saw. Remember the scare that we saw. This is the US yen, so this is a very strong US dollar, very weak Japanese yen. There was the high, sorry, I'll get rid of that. There was the high reached in, late 2025, this being a weekly chart. So this was the big sell-off that we saw. Remember the Japanese yen, sorry, Japanese Nikkei getting hammered 10% in a day. Everyone got really scared. The Nasdaq collapsed with very strong selling because they had to sell out of the Nasdaq and buy back their positions in the yen because the US dollar was getting hammered. So their positions were under pressure. So we saw that, and that could be a first leg in this move. So if I'm just analyzing this based on the model that we're looking at of how prices move, let's just have a look at the move from the high down to the low there, and I'm sure you can see straight away. There's your sell zone of that wave. We've had this initial wave down in the US yen. We've had the recovery, everything looking great, and now into the sell zone. And now we're seeing this turning down with inflation still bubbling in Japan, rates starting to go up, and US dollar looking a little shaky, not quite. The weekly trend hasn't turned yet, but I think it's in an interesting spot where it could sell off. So this is now something that's back on the cards. Do we see this? That's certainly a possibility. Not there yet, but just being aware that will that, I guess, feed into an unwind of carry trades again, which shocks everyone. Um, so just looking at that US dollar, my gut feel really on this, and this is where it's not sticking my neck out and saying this is going to happen. It's saying this is looking interesting as a setup. Really is looking at this and the cell zone reaction and what happens under here. This is a possibility where it's just a bit overstretched, overheated. Interest rates are going to come off the boil. I'll show you those 10 years in a minute. And yeah, if this starts to occur, what do we need to do? What do we jump on? High dividends, property may actually start to turn up. So that's sort of how I'm looking at it right now. And if it heads above 110, as I said, that DXY, I'm happy to fall on the sword and say, no, that's not wrong, especially if that weekly uptrend is maintained. But just be aware that US dollar looking a bit shaky. So let's jump to the 10-year bonds. And I think it's interesting because it's almost agreeing, what that US dollar's doing with what these 10-year bonds are doing. The overview, 10-year bond yields. This is the yields from when they were near zero to up to 5%. We can see quite clearly, nice strong trend in play. And just from that point of view, the yield needs to go below that to say that the trend is, under threat. So as long as that level around 3.2% holds, you could say that the trend is still higher and that, this could just be on the way to higher yields. But that's a lot lower, 3.2%, isn't it? So just looking at the way prices have been moving, though, and this is where I'm saying, you're looking at the most recent uptrend there, the most recent wave in the uptrend, and we're just analyzing all the data based on that. So if we're just looking up nice and close and just looking at the way it's moving now, I'm just quite interested in the fact that we've had, yet another uh, wave which is looking like it's turning down. So there's your wave higher. There's your point of control. Here's your buy and sell zones jumping out at you. So we've got your sell zone there, buy zone there. And remember, that's for yield, not for the actual bonds themselves, because they move inversely to each other. So you can see that we've got, these waves sort of going buy zone, sell zone, buy zone. And it's got top of the sell zone here, got all the way up to 4.8% yield. And now we've got the weekly sell pivot. And this week we had news that the Treasury really will be sticking to Janet Yellen's sort of schedule of the amount of bonds they're issuing and especially the duration of the bonds. So when they issue debt, they can choose to issue lots of short-term debt, which they've been doing, and not much in the sort of 3-year, 5-year, 10-year range. And also, what they were releasing was how much they'd be doing, and it looks like they're not adjusting it a lot. People are fearful that they need to be issuing a hell of a lot more debt. So the schedule sort of looked pretty friendly to the long end, and not too much uplift in what they're doing. So we saw the bonds rally after Wednesday when that came out. That's part of it. So and Musk is in there cutting costs and that sort of thing. So the fears of the rates really driving higher may be a bit overblown. These, President Trump sort of getting in, rates going up to 4.8%, fear, 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 and in the sell zone for yields, and now weekly sell pivot and turning down. Are we going to see what we've seen here? Yields actually turning down. So that's what I'm looking at now. It's looking pretty interesting to me because it is coming from that sell zone. So I'm going to start leaning that way, and clearly the weekly trend hasn't turned down yet. And again, with the bonds, I'd be willing to go with that weekly trend. So you can see there, if we do get the weekly trend shift, I'm going to switch to a bit of a bullish on bonds. That is, uh, this is actually bullish because when the yield goes down, the price of the bonds is going up. So it's just getting to that point where I think that could be a bit of a starting gun for yields to drop. And, again, you're saying the yields don't have to go up that much to make you say, well, watch out, I'm off that. So, 10-year bond yields above 5%. I'm happy to say, no, watch out because the long-term trend is actually still up, as I was saying. So I'd be pretty quick to run away, is what I'm saying. But this could be interesting because remember, everyone thought they were going to really sell off there, and we've had this weird run higher, even though they're dropping rates. Inflation's coming off the boil. Is this where it starts from? So that's what is in the back of my mind. So that's all I've got for you today. I don't know how long that went for. I rabbited on, but hopefully that gives you something to look at and think about. And don't forget about that whole US yen carry trade idea if this US dollar really does turn down. All right, cheers. I'll talk with you next week. And also, uh, I keep forgetting to let you know to click on the link below the video and just check out a document I've written for you. If you aren't a member of one of my services, just to check out what I do, how I go about it. If you're interested in my method, I teach you a lot about where that method came from, the rules behind it, so you can understand how I manage risk and make well what's been 25% annual returns for 5 years for members of my service retirement trader. All right, I'll come back with more next week. Cheers.